Good evening, this is Ken Long from Tortoise Capital Management. I'm going to do a quick case study on the regression line crossover system and just show you how I'm marking up charts and the decision points that I'm looking for. All right, so what I'm looking at here is RLCO 2012-04-11, an entry on 3-minute charts on IWM, the Russell 2000 small cap. I've got a 30-period Bollinger Band plus or minus 1 standard deviation indicated in blue with the Bollinger Band mean in the red. A 30-period regression line is the thick black line. 10-period regression line is the thick blue line. The thick orange line is a 2-period exponential moving average, which I'm using as a proxy for price rather than candles because it simplifies the chart. Vertical blue line indicates when I am stalking the trade. This was right at the open, the 10th of April and then the 11th of April. And then the thick purple line is the volume weighted average price, which I take to be fair value. Now at about just around 10 o'clock Central Time on April 11th, I elected to enter here inside the green circle when price was just a shade under 79. And my reasoning for it was that the 30-period regression line, the 10-period regression line, and the price were all north of the river. That's what we call the Bollinger Band region. Everything was north of the river and moving upward, and the herd of zebras, if you will, had all left the river and were heading north. And the Bollinger Band mean itself was moving north. So entered right around 79 and then was using a 25-cent stop here at the thick red line. And that is generally one of the important checkpoints for me, is that all the regression lines are on one side of the river and moving in that direction. Now at the same time that was happening, I'm now going to look at symbol SPY on the same day, April 11th. Now I'm looking at a 10-minute chart rather than 3-minute chart, and I'm interested in market support. In other words, I want to be long the small caps, and I'm hoping to see SPY also moving up. So this is looking back 2 days, and so I want to see what's going on here. You can see by the regression line and the price that it had sold off, and now it's starting to move up with power. And so really, there are a number of checkpoints, or what I call information checkpoints or decision points, where the price and the herd have decisions to make. The first one, I'm going to track just along the regression line and the price line here. When the blue line crosses the black line, when the 10-period regression crosses the 30-period regression outside of the Bollinger Band and it's moving back towards the river, that's the first favorable sign that this long sell-off here may be over and has started to reverse. So you can see the blue line and the orange line have crossed here. That's the first checkpoint. The next checkpoint is when they enter the river, when orange and blue enter the river, and that happens right about here. Now that was pretty much sideways, but what happened here is that the Bollinger Band region is selling off following price, but price has failed to fill any further. And so that actually is a positive sign when it's able to hold support and the Bollinger Band comes back to the price. Now you can see price started taking off here. The third checkpoint is when price and or the blue regression line, the 10-period regression line, cross the Bollinger Band mean. Now after a crossover outside of the Bollinger Band, the target we play for is back to the mean. Now that's the place where I expect it to hesitate and fail if that primary trend, which was down, is going to hold. But in this case, it blasted right through. This happened to be right at the close and then into the open. And now you can see that the subsequent price action causes the Bollinger Band to flatten out and roll up. So first checkpoint is the regression line crossover. Now the fast regression line entering the river, fast regression line crossing the Bollinger Band mean. The next one would be, and I don't have a circle on there, but when the fast regression leaves the river, and then when in this case it crosses the VWAP and keeps going, I take all those to be very important signs of upward price direction. Now let's look at the same thing following the 30-period regression line. Regression line crossover, that's one. The next time I should have a circle here where regression line enters the river. where it crosses the Bollinger Band, when it leaves the Bollinger Band. Now this is really a sign of market trending, when all three now, the price in orange, the 10-period regression in blue, and the 30-period in black, are leaving the river, having crossed on the other side of the river. The regression line crossover occurs here, and now they're moving up. Similarly, if you look back a couple days, here was a crossover, then blue and orange entered the river, crossed the mean, left the river, and then that was a precursor for a great big long sell-off. And then the black line, the 30-period regression line, crossed, entered the river, crossed the mean, left the river. This was the point right here at about 137.71 that we can say trending behavior has begun, and now we're ready for a trend move in that direction, and that's actually what we got, 2 full points in the S&P. Moving to the next little example. Now, I had entered that IWM on the 11th of April on the 3-minute chart, and this is what that looks like over here. About 10 or 15 minutes later, prices just continued to march up. I wanted to look at the 10-minute chart to see what IWM was doing. So RLCO 2012-0411. This is what I call IWM leaving the station on the 10-minute chart, and that is the slow regression line finally catches up and leaves the river, or the train leaving the station. Now both regression lines and price have crossed over and are on the far side of the river and are now going to start pulling away from the Bollinger Band. That's the train leaving the station, you'll hear us say, or the zebras have left the river, or crossed the river. Looking at the next little example, now this was today, April 12th, IWM. Now I'm looking at hourly charts in this case because I had entered IWM earlier, and now I wanted to see what was going on in the longer term time frames. And now you can see what I've marked off on the fast regression, and this is using hourly charts, but it still works. And now we're looking at like 10 days of hourly charts, and we see the crossover. Let's follow the fast regression, the blue line and the orange. The blue crosses the black, the blue enters the river. Now the blue and the orange are crossing the mean. The next thing I expect to see is if this trend is going to keep going, is for the 10-period regression line to get out of the river. So I'm looking for it up around 8107 would be an indication of the next confirmation of positive price action would be the price and or 10-period regression getting into this region here in the blue, or in the yellow, excuse me. And now on the fast regression line, again, we have the crossover. The next thing I'm looking to see is for the 30-period regression line to enter the river somewhere around 78.87. And then that would be followed by crossing the Bollinger Band mean and then leaving the river also. So I'm not sure which one of those two events is going to occur first, but those are the next two signs that this trend, which is beginning to develop, which is a reversal of this long sell-off here from 84 to 78, has actually reversed and gone the other way. So I've got 3 confirmed sightings of the herd, if you will. The crossover, the fast entering the river, fast crossing the mean. Now I'm looking for more confirmation, leaving the river on the fast regression line in price, and then entering the river with the slow regression. A little bit later, this is what that same trade looks like, and now just using 30-minute charts. So again, this is almost a universal set of indicators and relationships here. Let's look at the fast regression line and the price in orange. The regression line crossover occurs outside of the river. Fast enters the river. It crosses the median. Now what I want you to notice is that it's hesitating where we would expect it to hesitate at, and that is right at the Bollinger Band mean. You can see how the VWAP is flattened out, but it holds support here and then starts taking off again. That's a very favorable sign. We call that the panda trade. It's up and to the right. We got higher lows, and now it's starting to take out previous highs. That's a very favorable indication when it holds support at the Bollinger Band mean. And now you can see that this steep Bollinger Band mean, steeply down, is starting to slow down and actually getting flat, and will later start curling up. So Crossover, blue enters the river, blue crosses the mean, blue holds support at the mean, blue leaves the river. That's very favorable for the first part of the trend. Now let's look at the regression line 30 period. And again, this is 30 minutes. I like how nice and smooth this is. Crossover occurs here. Slow regression enters the river, goes right through the Bollinger Band mean, and now leaves the river. This is the beginning of very favorable price action. Now what ended up, so entries around 79.63 ended up rewarding with almost an 11-hour trade today, because this price went up past 81 on the way north. And so this is, you could even use a 50-cent stop or a 30-cent stop if you wanted to use the Bollinger Band mean. So if you got an entry here, 79.63, with a 50-cent stop, you were looking at a 3 or 4 hour trade intraday today. So that's just a quick look at what I'm calling the decision checkpoints or information checkpoints, how to confirm that the trend is working in your direction. It begins with that regression line crossover. That may be too early for you to want to enter on 3-minute or 10-minute, but looking at the multiple time frames, 3, 10, 30, and 60, with various look-back periods, you start getting the ability to read the breathing, the normal oscillation of the market, especially in those big Fed indexes. You want to be long not later than all three regression lines having crossed the river and now left the river. That's the beginning of, that's the final confirmation of trending behavior going in the other direction. And now you can start looking at previous moves to look to start calibrating your reward to risk ratios. But really, once they leave the river, my stop is not going to be further away than the Bollinger Band mean, because that's the hypothesis that now is going to roll over and slowly start playing catch up. So the fastest is price, then the 10, then the 30, then the Bollinger Band mean itself. So that's Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.